What happens to the stock market when a controversial figure like Donald Trump returns to power? Will his policies drive the market to new heights, or will they create chaos and volatility? How do we predict the future of the economy with Trump back in the White House in 2025? These are the questions many investors and everyday individuals are asking as they brace for what could be a monumental shift in the economic landscape. In this video, we will explore how Donald Trump's policies may impact the stock market in 2025. From tax cuts to trade wars, deregulation to global economic relations, we'll dive deep into the economic changes that could unfold. Along the way, we'll look at how sectors such as technology, healthcare, and infrastructure may be affected, and what it all means for investors like you. We'll also analyze Trump's influence on market volatility and long-term growth, as well as how companies and individuals might benefit or face challenges under his leadership. So, if you're wondering how Trump's return might shape your investment strategy, this video is for you. Let's dive in. Tax cuts and corporate growth, a double-edged sword. When Donald Trump took office in 2017, one of his earliest achievements was passing the Tax Cuts and Jobs Act, which slashed the corporate tax rate from 35% to 21%. This move was hailed by many as a way to boost American businesses and spur economic growth. Lower corporate taxes allowed companies to keep more of their earnings, which often led to stock buybacks, dividend increases, and higher investments in business growth. However, the impacts of this tax cut were not all rosy. While it did stimulate short-term growth in many sectors, it also added significantly to the national deficit and raised concerns about inflation in the long run. So, if Trump returns to the presidency in 2025 and reinstates tax cuts similar to those passed in 2017, we could see immediate benefits for U.S. corporations, especially those in industries like tech, manufacturing, and financial services. However, these tax cuts could lead to rising debt levels, which could prompt the Federal Reserve to increase interest rates, slowing down the economy in the long run. By 2025, investors should prepare for the possibility of another wave of corporate tax cuts and how they might influence corporate earnings. The short-term benefits will be evident, but it's important to stay mindful of the longer-term impacts on national debt and inflation. As we dive deeper into these concepts, we'll explore what specific industries might benefit from these changes and how you can position your portfolio to maximize returns. Deregulation, unleashing industry growth. Another major aspect of Trump's first term was his push for deregulation. By rolling back many Obama-era regulations, Trump aimed to reduce government intervention in the economy, arguing that less regulation would allow businesses to thrive. This included significant cuts to regulations in industries like energy, banking, and manufacturing. In the energy sector, for example, Trump's policies allowed for increased oil drilling and gas exploration, significantly boosting production. Similarly, deregulation in the banking industry provided banks with more freedom to engage in lending practices, which was welcomed by many in the financial sector. If Trump returns to power in 2025, expect a similar deregulatory agenda. While this could lead to an economic boom in certain sectors, there are risks to consider. Less regulation in industries like banking and financial services could encourage more risk-taking, which could lead to the creation of economic bubbles or, worse, financial crises. For investors, the key takeaway here is that deregulation could lead to rapid growth in industries that benefit from less oversight, particularly in energy, finance, and construction. However, this also opens the door for increased market volatility, so diversification and careful sector selection will be essential strategies in the years to come. Trade wars and global relations, the impact on global markets. One of the most controversial aspects of Trump's presidency was his aggressive approach to international trade. His America First policy led to tariffs on China, the European Union, and other trading partners, with the goal of protecting American industries and reducing the trade deficit. While the trade war with China was a major focal point of Trump's first term, the ripple effects were felt across the global economy. Companies that depended on international supply chains saw increased costs, and global stock markets experienced significant volatility. In 2025, Trump's return to the White House could bring about a new era of trade tensions. A renewed trade war with China, or potentially even new tariffs on other global trading partners, could lead to short-term market volatility. For U.S. companies, the effects would vary. Some industries, like manufacturing, might benefit from protectionist policies, while others, such as tech and retail, could be hurt by the higher costs of doing business. Global investors, in particular, need to stay alert. If the US engages in new trade wars or escalates existing conflicts, we could see stock prices fluctuate wildly, especially in sectors tied to international trade. Additionally, shifts in trade policies could affect the value of currencies, commodities, and other financial instruments. The influence of Trump's communication style on market volatility. Donald Trump's unique communication style, particularly his use of Twitter, had a direct impact on the stock market during his first term. Tweets about tariffs, trade negotiations, or even specific companies could cause rapid fluctuations in stock prices. In 2025, as Trump returns to power, his unconventional approach to communication will likely continue to create volatility. For example, if Trump tweets about a new trade policy or expresses an opinion on a specific stock, it could cause that stock's price to spike or plunge. Investors will need to stay on top of his social media posts and public statements to gauge potential market shifts. The flip side is that, for savvy investors, volatility can create opportunities. If you are an active trader, you can profit from these price swings by taking advantage of short-term market movements. However, for long-term investors, it may be crucial to stay calm and not be swayed by every headline. Infrastructure investment: Trump's vision for revitalizing America. One of Trump's key proposals during his first term was a massive infrastructure investment plan aimed at modernizing America's crumbling roads, bridges, and public transportation systems. While many of these projects were delayed, the concept of large-scale infrastructure investment remains a central part of his vision for America's future. In 2025, if Trump wins a second term, he could push for a renewed focus on infrastructure spending. This would have significant implications for industries like construction, engineering, and materials, potentially creating thousands of jobs and stimulating local economies. For investors, infrastructure spending is a clear opportunity. Companies that provide construction materials, such as steel and cement, will likely see increased demand. Additionally, construction firms and engineering companies could benefit from government contracts related to these projects. However, it's important to consider that infrastructure projects can be costly and take time to come to fruition. For investors, the key is identifying companies with the capacity to deliver on large-scale government contracts and monitoring the progress of infrastructure legislation. Preparing for Trump's impact on the stock market: key takeaways. As we move in 2025, it's essential for investors to prepare for the impact of Trump's policies. Here are a few strategies to consider. Diversification is key. By spreading investments across multiple sectors, you can reduce the risk of losing money if one sector takes a hit due to policy changes. Stay informed, monitor Trump's speeches, policy announcements, and social media activity closely. These could have an immediate impact on stock prices. Focus on long-term goals. While short-term market movements may be volatile, don't lose sight of your long-term investment goals. Sector-specific investments: certain sectors, like energy and construction, may benefit from Trump's policies. Look for companies in these industries that stand to profit from deregulation and infrastructure spending. In conclusion, the potential return of Donald Trump to power in 2025 raises significant questions about the future of the stock market. His policies on taxes, deregulation, trade, and infrastructure have the potential to reshape industries, create market volatility, and provide new opportunities for investors. By staying informed, diversifying investments, and keeping an eye on long-term goals, you can navigate the potential changes and make the most of the market opportunities that may arise. Thank you for watching. Don't forget to like, share, and subscribe for more.